Hi, everyone. Welcome to Upside and Impact Investing for Change. We are distributed by the New York Stock Exchange on etfcentral.com. I want to thank everyone for listening there. And then, of course, as always, you can find this podcast on iTunes and Spotify. You should, of course, subscribe to never miss an episode. I have something. I'm Elysabeth Alfano, by the way, CEO of VegTech Invest and the host of this podcast. If you have listened to previous episodes, you know that I haven't really stopped talking about COP28. Yes, it was in December, but what happened in terms of highlighting food systems transformation, not just on Food and Agricultural Day, but on all of the 12 days of the United Nations Climate Change Summit. I found that people were talking about not just bringing in food systems transformation for better environmental footprints, but how we were going to finance food fast to make that happen. With that in mind, I wanted to continue the conversation because my guests today really have, I wouldn't say an insider track, but I'll say intimate knowledge, as they have long been champions of this subject and bring really a level of intelligence I wanted to share with everyone today. So with that, I bring on my guests, and let's hope I am pronouncing her name right, Holly Freishtat. Really, Holly? Oh, good for me. Okay. Holly Freishtat, who's the Senior Director of Feeding Change at the Milken Institute, and Caitlin MacLean, who's also Senior Director, but of Innovative Finance at the Milken Institute. Thank you both for being here today.
It's great to be here.
Thank you.
So I wanted to start off with Holly because I know Holly, and I finally met Holly in person in Dubai at COP28. And I wanted to say, Holly, before we dive in deep to food systems transformation and what happened at COP, but more importantly, what has transpired since. I think a lot has. First, tell everyone, what is Feeding Change? What does it hope to accomplish, and why was it created?
Great. So thanks so much. So Feeding Change is the food system portfolio within the Milken Institute. The Milken Institute sits at the intersection of finance, health, and philanthropy. So my interpretation is that Feeding Change sits at the intersection of finance and food systems. And so we are here to create a more sustainable, resilient, equitable food system, really looking at social and financial capital and sort of our levers of change, our policy, research, and thought leadership. So that's a quick overview. And when I think about the work of Feeding Change, one of the key areas is sustainable, resilient food systems, right? But sitting at an intersection of finance, like, well, how do we make sure that we have the appropriate amount of financing to create, a transformed food system? And that's what we're here today to talk about.
And so this is going to seem elementary, perhaps, for my guests today, but for those listening, let's even moonwalk it back one step further. Why food systems? Why, in the Milken Institute's perspective, would we even need to address food systems?
Great. So food systems are a part of health. It's a part of finance. It's a part of philanthropy. It's a part of everything we do. We can't have a healthy society without healthy food. We can't have healthy food if we can't grow it, right? And so all these questions come back to how do we create health for our own individual, our community, and the planet? And that's what Feeding Change does at the Milken Institute. So that's a very quick overview of looking at its intersection of health and finance.
Mm-hmm. And I think from our perspective in the West, we walk into a Costco and we think, well, what could possibly be wrong with the food system? I've got all this food. Like, where is the problem? But we see the high energy cost. We see the high use of land. We see the high use of water. We see, and we'll talk about it later in the podcast, but what I like to refer to as the sticks of the food industry. You see the high risk of pandemics, the high risk of antimicrobial resistance creeping up in society. You see the skyrocketing healthcare costs, which is what you're talking about. Can't have a healthy society if the food system's making folks sick. So it really does touch on everything. And even though it seems in the West like we have access to food, that doesn't protect us from what happens if the rest of the world doesn't. And I think that's we're just so much in the kitchen sink here you could throw in, but I understand that to be where the policy initiatives come in with the Milken Institute. I do want to bring Caitlin into the conversation. So Caitlin, chime in if you have something to add.
I would just say, I think that the beauty of the program, the Feeding Change program, is that because we sit at the intersection, as Holly was saying, of kind of health and finance, oftentimes we end up talking to each other, right? We're in silos and people kind of do their day job and understand exactly what they do, but not how it fits into the broader system. And so I think what Holly and her team have been doing is so important because it breaks down some of those silos to say, listen, I know you're a health person or you're a food person, you're not a finance person, but we can help kind of bridge that language barrier. Sometimes I think that prevents a lot of collaboration. So it's a great program for that kind of convening power.
It's such a meaningful role because I believe it actually is going to take all hands on deck to shift something as large as the global food supply system. Some have said it's 8 trillion, some have said it's 16 trillion. I mean, it is moving the Titanic in very serious nature. So it's going to take all systems working together, and they currently don't. So there's that. Before I get into maybe what some of the progress we've seen from the outcomes of COP28, I'd like to say one of the things that I found most inspirational, it might have been on Holly's panel at COP28, was the FAO came out, and I'll share this article with you if you haven't seen it. You probably have. The FAO came out with an article on the externalized costs to society of our general food system. And they said it was $12.7 trillion, about 10% of global GDP, primarily because despite the money we throw at it, our food systems is keeping people sick and unhealthy. This means they're not productive, so they're not going to work. So about 73% of that 73 trillion was attributed to lack of working potential. About 20% was attributed to the environmental cleanup we do of the current food system. And then poor nutrition was only about 4%. So I just think that's important from an understanding of the societal costs at large that the food system has, and kind of underscores how much it touches almost everything we do. Holly, back to you. What were your major takeaways from COP28, and how have you seen progress play out, if at all?
Great. So I'm going to answer that question and kind of lead up to it. So I want to first start is in COP27, one of the key messages was that food was finally moving on to the agenda, right? It wasn't like really there yet, but it was getting closer. This has been a long progression, right? The UN food summits and then helped to get on the COP, and food has been now, and this is kind of my big takeaway from COP28, like food is finally, this is really cliched, on the plate, right? Food is part of the climate agenda, or it's beginning to be normalized. And so one of the things that we've been doing at Feeding Change is this past year, starting exactly around a year ago, we started a series of sessions on how to finance food systems. 1 second. And so one of the things that we've done is we've had 14 sessions. 14 people have spoken, panelists have spoken on how to invest and look at financing in the food system. And COP28 was really the culmination of that, of our fifth session. And one of the things that we need to talk about, and I think that at COP this was normalized, is that greenhouse gas emissions is a third of the problem, right, of climate, a third of the problem, yet only 4% of climate finance. Well, that is a huge misalignment. And how do we shift that misalignment? How do we be able to scale? And you were talking about the numbers of what do we need to have, a sustainable, resilient food system. We're talking about $350 billion a year. We're nowhere near that. We're at like 4% climate finance. So how do we start to shift that? And so what I really saw was this watershed moment at COP was that there's a food pavilion, right? And that was the first time we really had a fully centered food pavilion. The food actually being served was the food actually being served was aligned.
Start with the basics.
Which was great. And that we had 160 nations sign the declaration, acknowledging and understanding a sustainable, resilient food system, right? And now food is a climate issue, and that food systems is a part of not only the problem, but a part of the solution. So I think that what we learned and saw at COP was all this many years, of work to make sure that the food system people are not just talking to each other, right? But that's a part of the finance world. It's part of the philanthropy world that we're really starting to see the issues. So that was kind of the highlights of it. The takeaway, or the part where we need to keep going, is the food pavilion was amazing, but there was mostly a lot of food people in the food pavilion. And where was everyone else, right?
Mhm.
And so we still have work to be done of making sure it's integrated into finance and as many pavilions as possible. These conversations continue to break down the barriers in the walls.
I love that. And I'm
From
hoping you,
conversations to investments. Like, conversations are not enough. We're not moving fast enough. I think that COP28, it was, the stock take. We saw where we are. We're nowhere close to where we need to be. We need to scale this up and move faster, and no one can do it alone. And I think that was really the takeaway. We got to keep moving beyond just conversation and this normalization of the words, food systems and climate, but now let's see the climate investments start to shift and scale.
And before I throw it to Caitlin, I just want to add a few things there. First of all, I hope that we can talk before COP29, and I'd love to see more food systems in the finance pavilion. So there's conversations maybe for us to have there. But I think this was on your panel. It was, and I'm probably pronouncing her name wrong, Gita Sethi, the food systems expert at the World Bank, calling for 300 to 500 billion, give or take. You had mentioned 350 billion every year for the next 10 to 15 years invested in food systems transformation, because as Holly said, 30% of the world's greenhouse gas emissions come from the agricultural sector, our food systems. 60% of that is the animal portion. So that's 18%. That's a huge number, which makes, this is the good news, that makes it low-hanging fruit. So as we realize that fossil fuels will not be enough to get us anywhere near 2030 goals. Oh, has anyone actually worked on their 2030 goals yet? Okay, yikes. So as we start to really focus on 2030, food systems is that low-hanging fruit that can get us there, because these huge numbers, you address these huge numbers, 18% coming from the animal agriculture portion, but just generally 30% coming from agriculture as a whole. So there's a double-edged sword. It's bad news and good news all at the same time. And this concept of blended capital, that it's going to take all hands on deck. This is where Caitlin maybe comes in. And so you see the World Bank talking about it, FAO talking about it, Milken Institute talking about it, coming out of COP28, the Bezos Earth Fund talking about it, investing $1 billion into food systems transformation. That recently made news. So I think it's very exciting as we look at blended capital. Caitlin, I don't know if you want to talk about what blended capital is for people, and then why food systems would be considered innovative finance, or is it considered innovative finance?
Yeah, definitely. I think, there's a wide variety of definitions, but for us and for the sake of this conversation, we look at investment opportunities that might not attract kind of traditional sort of commercial rate investment dollars. And so if it's not, kind of purely the capital markets, and if it's not purely philanthropic, do you need to create a structure that could blend in different types of capital to really meet kind of what investors are looking for, but also what the recipient of the funding needs, right? So you blend maybe a mix of concessionary capital, capital that is willing to take less return than kind of a traditional investor, with that could be philanthropy, government, alongside some of the more kind of commercial investors. And so we really see the opportunity there of trying to match more exactly what an investor is looking for, and then creating the structure based on that to really kind of crowd in new types of investments. So we're excited about the opportunity, certainly for this market. Some of this market, I would say, might not even need innovative finance, right? So to the next part of your question, I think that there's kind of pieces of food systems transformation that might just be kind of commercial capital, but maybe it's a new sector for an investor, right? Maybe they're thinking about climate change, but they're thinking about the energy transition and focus more on renewables. How do you get them to then, kind of think about food systems and outside of just kind of traditional agriculture, looking at fisheries or something like that, to say, how do we get more people invested? And it might not take some innovative financing model. It might just be an opportunity for traditional equity or debt. However, there are certainly subsectors of kind of food systems, and certainly different regions of the world that do need to have more of a kind of innovation in the financing, the structure itself. And that's where the blended capital really can come in, because a lot of the, kind of need might be, helping smallholder farmers, or helping, kind of smaller agricultural businesses, or building out infrastructure, which isn't entirely sexy for investors to look at. And so if you're thinking about kind of what are those needs to meet kind of the billions of dollars that Holly was talking about, some of that might require a little bit more creativity in how we structure the investments.
I'd love to follow up on that a little bit, because I want people to really understand this, and I want to maybe take a little bit of a deeper dive. On this show, I talk a lot about obviously investing and the work that we do in educating the investor, because when there's an investor who's interested in sustainability and they're very focused on renewables, we say, oh my gosh, diversify your sustainability sleeve, bring in food for the impact and the diversification. And just from a strictly investment standpoint, that makes a lot of sense for folks. So we're working on the education and exposure portion of, I'll say blended capital as being philanthropic, government, VC, and Wall Street capital working together. Perhaps I'm naive and oversimplifying, but just for the audience, I'm kind of looking at it that perspective. And so we try to do our part at VegTech Invest. But I love it when you say, we're trying to create what investors want. Can you be more specific? What are you seeing pops up that investors want in innovative finance?
And I think what's great about it is the hardest part oftentimes is getting them interested. So the work that you guys are doing is fantastic, getting them educated and then interested, right? So you want, they certainly want to be educated too. I think that then the next part of that is there an investment opportunity there for them? And does it look like what they normally invest in? So if you're saying to somebody who is looking at traditional renewables, solar or wind or things like that, and they're saying, I understand what that risk profile is. I understand how to assess whether or not this is a good investment or a bad investment. Mm-hmm. And then you say, well, you should look at food systems. And they're like, I'm not sure that I have that exact expertise. Mm-hmm. So if they need to be, one, educated, as you said, but two, then does the investment opportunity itself look like any other investment opportunity so they can compare it? So are they putting money into a private equity fund that, is investing in companies in the food space and understanding what the multiples could be, what the return potential could be? Are they buying some type of social bond or some type of, an impact bond that isn't just, kind of green, which is what they've traditionally been focused on climate, but, is there something that could have that, kind of food angle? And so they say, okay, well, I know what a bond looks like, and I know if that's in my portfolio and that's, kind of an allocation we make, then I can understand that. So for us, it's kind of looking at how do you, one, work with people who can educate them about some of the risks and the opportunities, but then also make it as simple as possible for them to recognize the investment opportunities and try to, as much as possible, it's difficult, compare apples to apples, right? To say, like, if this is going to fit within a neat bucket for me, even if it's a sustainability bucket, can I easily identify what the options are? Sometimes blended capital funds are hard because they say, this is not my private equity bucket. It's not my philanthropic bucket. It's not my VC bucket. What does this look like? And so there is some additional kind of education that needs to happen. But I would just say, I think that to your point about the renewables, is that there is also a real opportunity, I think, for the disruption in this industry to include much more upside than I think people give it credit for. I think that there is an opportunity to say, listen, this might not be very big solar plants, but the change on the ground can actually lead to significant kind of investment opportunity and revenue possibility that, people haven't necessarily identified yet.
Oh my gosh, you are describing my everyday work life, 9 to 5, Monday through Friday. It's why we created our ETF. We wanted people to have exposure to something they know and understand, an easy vehicle that's out there, just that they can compare to renewables and other kinds of financial products that have ETFs. And so we wanted one in food. We also wanted to help people understand, while not sexy, infrastructure, the nuts and bolts, is really where you have an enormous investment opportunity, building out that supply chain. It's not only where you garner all that greenhouse gas emission reclaiming, if you will, but I liken it to, we moved from the horse and buggy to the car, we moved from the landline to the cell phone, we moved from printing photographs. I used to wait in line at Walgreens. I now no longer do. I have digital imaging. Those things shifted pretty quickly, particularly the latter two. And it's that infrastructure that allows it to happen. It's like semiconductors for computers. There's a very good business case there. And as I always say, it's making money usually isn't about one company having 3% more revenue or not a year. It's usually about systems shift, be it food or anything other. And that's when real jump in wealth takes place, when there's a system shift. And we're not talking about tweaking something here. I think we're all talking about a food systems shift. And that is, the carrot is that wonderful opportunity. The stick is, according to the United Nations, we're going from 8 billion people to 10 billion people, but we're not getting more land. We're not getting more water. Climate change is making it more difficult to produce agriculture. The energy use in food, just some stats here. Any plant-based burger is going to use 97% less water, 97% less land, produce 90% fewer greenhouse gases, and 37% less energy. So there's an interesting Venn diagram with energy. And as natural resources become something we're all keen to save, it's save from a financial perspective, to not misuse and then no longer have, it's attractive on many, many levels. Okay, so we know that it's attractive on many levels, but we also know most people don't know this yet. And they don't know the upside this is why this podcast is called Upside and Impact. They don't know the upside financially. They don't know the impact. And they also don't know how quickly it can change. So when I think of electrifying the grid for all of a new car system, that's a capital expenditure much more significant than, say, rebuilding the food system. So I'm wondering if either of you have a sense for how quickly food systems transformation might, for lack of a better expression, come from behind and shift quickly.
So I can start. I think that we've been talking, for around 20 minutes now, and we haven't defined the food system. So let me first start with defining it, because then we can put the answer to it. Because the answer is, it's not going to all shift equally at the same time, right? There's going to be certain parts that may shift first, another part might be behind, and then it will kind of leapfrog in front. And so when we're talking about a food system, we're talking about production, but production can go from crops in the ground to seafood, right, in the oceans, to controlled environment agriculture that could be plants or it could be cultivated proteins, seafood or meat, right? So there's a lot of different areas. And then there's all the inputs for that agriculture, right? From your fertilizers to your seeds, to your tractors. So all that, right? Because we're talking about where to invest in a food system. Some of it's, infrastructure. Some of it's going to be related to technology. And right, so that's one part. And then you have the manufacturing of the food system, and then how are you addressing scope 1, scope 2, scope 3s, right, of manufacturing. Then you have all the transporting of the food, the trucks, the refrigeration, and so forth. Then you have the actually built environment of how it's being sold, all the stores, right? And then we have all of us, all the consumers in our homes or whatever they may look like, eating and disposing and wasting the food, and all the waste that's built in the system. And so that's the whole food system. And so when we start to look at how do we invest and what's going to go first or second, we're starting to see it very much in little pockets here, little pockets there. We really can't guess what's going to go faster or slower. But we do see, when you go back to COP28, and one of the things that we say, we really need to see adaptation and mitigation issues around food, right? And as we start to see that, how are we starting to see those changes reflect in the food system? We're seeing AI is changing a tremendous amount in our supply chain right now, creating some efficiencies that are really going to help. And I think that's one that we're seeing quite a bit of movement in supply chain. And then I think the other area is that then we see, in one of our panels, we had a session at Asia Summit and also one at the Middle East and Africa Summit. where we were hearing from institutional investors, right? And they were the ones who were saying, well, it's about how to invest in similar things that we're already investing in, right? So we're already investing in crop science. So how do we look at crop science that can create a more climate-oriented food system, right? And then you can talk to a philanthropist, which we've had philanthropists on our panels as well, and they will say, how do we de-risk the farmer so that they are able to make the changes on the farm? And so we're going to see many different areas of investments and at different speeds as well.
It's one of the reasons why in our ETF, we really focus on the entire problem as a solution, or the entire equation as a solution. So as you say, starting all the way with ag tech and better fertilizers, greenhouses, ways of precision watering, just to get more vegetables to more people, more cleaner proteins to more people in a shorter amount of time. Ultimately, it is this. We must feed more people using fewer resources in a shorter amount of time, traveling less distances while creating less damage. That's the equation we have to solve for. And that's the supply chain and every business in there. So that might mean, as you were saying, Holly, ag tech right at the beginning. But as we move along the supply chain for novel technologies and ingredient companies and flavor tech companies, flavor and technologies and texture companies, you might find as cultivated meat 6, 8, 10 years from now becomes a viable option, we might have bioreactors in the ETF because it's part of the supply chain producing more efficient food. And that's really what we're here to do, is feed more people more efficiently while creating less damage. I find it also very inspirational, while less food waste at the same time. We didn't talk about this prior to the conversation, so it's a little off the cuff. And if you don't want to go there, we don't have to. But I'll say often on this podcast, I talk about the enormous potential here for the farmer. When I think of who sequesters beyond AI can sequester, but we mere humans, it's the farmer. So the farmer is the only one whose job has the power at their fingertips to sequester. I think this puts them in an enormous position of power. And as the food system transforms, I think we all see it as a just transition, not just for the global South, but also for the farmer, which perhaps repositions themselves in a better spot. So I think that's everyone's intention from the World Bank. I don't want to speak for anyone, but I think everyone has that in mind. Correct me if I'm wrong. So kind of building off of what Holly said, and maybe Caitlin can jump in here. We're still sort of talking theoretical. I mean, I have a product on the ground, but we're still kind of talking about helping people understand this is low-hanging fruit, that the impact can come faster, that the impact can be across so many sectors, starting with ag tech and all the way up the supply chain, not just the infrastructure part, but the entire supply chain. When is Wall Street gonna wrap their minds around it? Philanthropists, they've got the memo. And governments do as well. You're saying Israel invest, China invest, Singapore invest, Holland invest, Germany invest. The U.S. is investing. We're not leading the way, folks. That's maybe a national security thing somebody wants to think about. But, we're in there, but there's others as well. So when are we really going to see Wall Street jump in?
Yeah, it's a great question. And I think as you're talking, even just some of those countries that you mentioned, I mean, sometimes necessity drives innovation, right? So sometimes it's, the people who see that there is the risk there and they understand, kind of how to identify that and price that, or it's the market demand. And as Holly was talking, I was thinking about some work we had done almost 10 years ago now on the electric vehicles market, and trying to get people to transfer to, kind of at least a hybrid or an electric vehicle. And I'll say that 10 years ago, that was still actually a big ask. And there were people who didn't understand kind of what the options were. There wasn't great infrastructure, going back to your comment about the infrastructure in terms of charging stations. There weren't great models for, was it exactly what I as a customer wanted? Because did it look like the car that I already have, or the function of the car that I already have? And that answer was no. So there were a whole host of market dynamics that needed to shift. And we were trying to get Wall Street more interested. And they were saying, we don't really see the upside. And what did it take? It took, kind of having government incentives, government carrots to come in and say, we're going to incentivize not only the production of cars, but also the purchase of cars. We're going to help it make it easier for the customer or the farmer in this case, but you know what I mean, in your example, to use the technology that we now have. It also takes the market to say, listen, we might, if we're Ford or we're Toyota or we're Tesla, more appropriately, we're going to make this, a real market opportunity, and we're going to drive demand. And then all of a sudden now Wall Street is extremely tuned into this trend, right? And so I think that, how do you get them engaged? We need the government incentives. We need the government carrots. We need, in terms of at every level, we need to focus on how you get adoption, because even if you have the nice new technology, it doesn't really matter if no one's using it. And so you need to focus on what it's going to take to get adoption at scale. And then there needs to be, I think, kind of the market draw. And this is certainly the case with plant-based options, protein options. I think we have seen a lot more interest and uptick because of the, kind of consumer demand. So you need sort of that perfect storm. And then, of course, Wall Street would be happy to come over when they see that the profitability. I mean, I think there are ways in the interim to get them excited, but I think that it does take kind of a coalition approach to making that market opportunity real.
I want to let Holly chime in before I also add.
So I think what's really interesting, I'm just going to use another example of like solar finance, right? It took a long time for solar to finally become mainstream, which it's becoming mainstream now. We're seeing it in many different finance options, but it took a long time. I mean, it was 20, 25 years until it got there. Now, we don't have that time in food systems. We don't have 25 years, and we have to learn from the lessons and speed up these, roadmaps and just go faster now because we can learn. So I keep thinking about solar finance. Well, solar finance has a great opportunity within agriculture and in the food system, right? So does wind. We can look at all these different, when you look at electricity and solar or whatever it may be, well, that can be applied to agriculture. It's not a new system. We just need to apply it to agriculture and the full food system at large. And so I think that's another area that we need to keep realizing. We're not, recreating the wheel. We need to take the energy playbook and the transportation playbook and adapt it and move faster with food systems.
So I'd like to chime in there. There are a couple of reasons I think this will happen faster. First of all, I think it needs less CapEx to shift and get the price down. There's the Good Food Institute talks about making plant-based. I use this expression plant-based innovation that refers to the entire supply chain. Making plant-based innovation cost less, be more convenient, and taste better. And while all of that is true, I really think it's price. They always say it's price, convenience, and taste. And I actually think it's price. Everyone's willing to try. Everyone's willing to give it 30 seconds more cook time or whatever it needs if that price is there. And I think bringing down price through government help is very, very important, and that things can shift faster. I sort of liken it to, think of Africa just not bothering with the landline and skipping right to 5G. Places like Africa, which are going to be they're not going to be, they are food insecure at the moment. And, from a national security standpoint, people just don't sit down and not have food. They tend to move to where they can get food. This becomes everyone's concern. Anyway, I think that cultivated meat, et cetera, could find homes faster in some of these places that are food insecure. So there's the government incentives for R&D and for bringing down the price, but there's also that major stick that I don't know solar had. So scopes 1 and 2 now demanded by the SEC, scopes 1, 2, and 3, and it's really scopes 3 where 85% of the emissions are emitted. State of California, if you want to do business in the state of California, you're looking at disclosing scopes 1, 2, and 3. Now we're talking about those big sticks. So there's the carrots, but there's the sticks. Again, pandemic risk. It was just last week, I believe, we saw that avian bird flu jumped to a dairy cow, jumped to a human. We all know the financial implications of a pandemic, and I don't think we want to do that again. Antimicrobial resistance becoming a topic I didn't even think would make it to the mainstream press, and that's now becoming an issue of concern. And this is on top of climate change and biodiversity loss and skyrocketing healthcare costs. So you've got all these sticks and then these carrots of really innovation is where real wealth is captured. those innovative spurts, that's when there's a great chance for upside. So I think the timing is right here. I want to bring on, I don't know if either of you are familiar with Synthesis Capital. If you can see, and I'm sorry for those listening on audio, this is an S curve. It follows pretty much an electric vehicle S curve. This is what Synthesis Capital, which is a venture capital organization out of the UK, has surmised by looking at Jefferies and Credit Suisse and other large banks as to their best estimates for when food systems will shift. And they've culminated all these together to put an S curve on the screen for us. And they're sort of saying, now this is about a year and a half old and the economy remains tricky, but in this, they're looking at sort of the uptick in the early 2030s. That might be 2035 by now, given the economy, or it might be 2031. I mean, things can move very quickly. Boston Consulting Group and Bloomberg Intelligence concur with this 2030-ish to 2035-ish. That could mean 2028, but basically it's fast, soon. I don't know if either of you, Holly or Caitlin, have a thought on this. Just the general, not the charts, just the general.
I wish my eyesight could see that.
Sorry, everyone. And if you'd like to me to send this to you, just find me on LinkedIn, listeners, and I'm always happy to do that.
I mean, I think that would be, I think it's, the optimism is great. I think the ability, I think to your point about the sticks, I think that is going to be critically important, not just here in the US, although having been to California, we applaud what they're doing, but also in the EU, right? The EU is doing, has very similar demands coming out of, kind of climate conversations. And so I think that they're increasingly, we're understanding kind of what are realistic sticks to really price in the externalities, even to come back to what you talked about at the beginning, right, is understanding kind of how do we price in externalities. And so I think that there might be a little bit more optimism than I have. I'm a New Yorker, so maybe I'm a little bit more cautiously optimistic about things like AMR, antimicrobial resistance, and pandemic risks. We've done a lot of work in that space, and I think that people should be way more afraid of both of those things than they are. And I don't think there's appropriate sticks there yet from a government side, but I think the climate piece of it, of now people being aware and educated about the, kind of potential risks, broadly speaking, is only a benefit and can only hopefully push us, as you said, kind of closer up that curve faster. Because I think that people have a more of a sense of, it's not doomsday down the road, it's now. It's we don't have water now, or if you're in California, we don't have insurance now. There are things that are happening right now that hopefully, even if it's not specifically on food systems, will make the sense of urgency a bit more palpable for investors, for the market, and for the industry.
I think a really important part is that one is with the food system, there cannot be one solution, right? Yes. We know that alt protein or plant forward is hoped to be a significant piece, but there's so many other huge areas that need to be invested in. We need to invest and really look at the solution in the entirety of the food system. So I think that's one. And we've been talking a lot today about climate and disruption, right? And how we need to grow food. We're already growing less calories than we were a few years ago because of climate disruption. Or we're already seeing the shift. It's not in the future, as Caitlin was saying, it is in the now. But one thing we really need to remember and focus on is the resiliency, right? It's like we need to be resilient now. We can't be resilient for the future. And that's something we need to build and invest in, is the resiliency and the resilient infrastructure and the resilient data technology and backup systems of our procurement and our supply chain. And we've seen the fragility of our supply chain just in this last year, nevertheless, last several years. And so we need to keep looking through, how do we invest and what do the solutions look like to really make sure resiliency is built in to our scope 1, scope 2, scope 3. It's not just climate, it's how we're resilient to it.
Mm-hmm. And it's funny because when I have conversations with asset managers about their sustainability investments and how food can work into that with what we do, they do first look at me puzzled, like, what are you talking about, food systems? But I'm easily able to start with lack of resiliency because we all lived through COVID and we saw how quickly those food supply chains fell apart. And the reason for that is they're very inefficient. They're very long. So you cut down trees to grow crops that have protein and fiber. Do you give that food to people? No, you give it to animals, and then they need time, land, water. Oh, they need more food. That's more. You're talking about really inefficient way of feeding people, a very heavy middleman there. So they all quickly understand the financial benefit of tightening the supply chain, bettering the cost of goods sold, making a resilient food system. But we also talked to them about, and this was Caitlin's point, the market hasn't yet priced in that these are pretty much high growth opportunities at low growth prices. Everyone's focusing on an election, for better or worse, a tumultuous economy, definitely for worse, and then sustainability, which has its own, unfortunately, political sideshow. So they're just kind of trying to stay alive out there. But I think as we can kind of get through 2024 and maybe that election, I think high growth companies at low growth prices kind of resonates with the asset manager, and also that food systems is a way to bring down the carbon footprint of their own investment portfolio. So I see Wall Street now finally saying, oh, I too need to have a good carbon footprint with the work that I do. So food systems is great there, of course. So I am optimistic. Caitlin, shoot me now, but I am optimistic. But I'm also, per Holly's point, I'm realistic. It takes all hands on deck. It's all parts of the supply chain. It's all solutions, which is why we really don't use the phrase, at least on this show, use the phrase alternative proteins as much as we say diversified proteins. It's just the food system's way too big to think that one thing would fix it. So we're looking at a yes and kind of situation with diversified proteins. So I'm very excited. And before I sort of end with my last little wrap-up questions, any thoughts about COP29, Holly? How do you think it's going to go?
So I think that we have made a mistake of going from one COP to the next COP to the next COP. And how far can we get when we're only 1 year in advance? So I'm really looking at COP30. Not that COP29 is not important, it is. But I'm looking towards COP30 Brazil. Like, what does 2 years look like, and how do we really achieve that? And how do we, and then from that, back end it to what does COP29 need to do? Rather than going from one to the next. And I think we've just had to get food on the agenda. So we've just been going 1 year to the next, But now it's time to say, what are we really going to get done at COP30? And how are we going to see a significant transformation just in 2 years? And so that's where I'm really looking to that work. And so I think focusing into COP30 and what those goals are.
Well, Holly's very smart. That's why she's on this show. Caitlin, I don't know if you have any last comments before we have a couple quickie wrap-up questions.
I would echo what Holly says. I think that, certainly this year and also then kind of subsequent years, I think after seeing food have a much more prominent role on the international stage, I think it just allows for collaboration. It allows for, kind of potential, kind of breaking down of those silos that we talked about at the beginning. And so I think you'll see it this year, but I agree with Holly that even, kind of for Brazil, I think we'll see some of the impact of those collaborations, the impact of some of that, kind of breaking down of silos. And I think it'll be an important moment to see how that curve continues to kind of mature.
Mm-hmm. I sort of think of this when I go to the doctor and the doctor says, hey, we're going to try to get to be proactive about your health, not reactive, waiting on some bad thing to happen and then scrambling to fix it. We really try to help investors along to see the benefits of being proactive here rather than reactive. And that would be my wish, I think, more than my thought about how we move forward. A couple wrap-up questions, because it's always nice to get to know my interviewees a little bit better. I used to have this question focus on the last 10 years, but you can change it to be 5 years. What do you wish you knew 10 years ago that you know now? Caitlin?
I would say that that people consistently change what they want to do with their lives. You know, it's like, it's one of those things where you think like 5 years or 10 years, I know exactly where this career is going to go. I know exactly what the market's going to do of innovative finance. I know where this is, you know, going to be, or I should know. And I think allowing for flexibility, I wish I could tell myself to be excited about the flexibility you're going to have because people are consistently changing, the market's consistently changing.
What great career advice, Holly.
So 10 years ago, I was working as a chief of food policy and planning in the city of Baltimore, and I was working on the city's food resiliency plan. And we created, in collaboration with Johns Hopkins, and this failures of the food supply graphic. And I was looking at this like failures of the food supply, and I was like, may this never happen to us. How will we ever do that? And then what happens, right? Then we have the pandemic, and then we have multiple catastrophes on that. And we have seen failures of the food supply throughout. So I wish, like looking back like 10 years ago, I wish we realized that it wasn't just like 30 years from now. It was actually less than like 2 years of that happening. So I think that lesson learned is like really understanding the value of resiliency and the backup plans and planning for failures of our food supply chain and make sure that we can bounce back fast and equitably.
And being reactive is so expensive. It really is very, very expensive, so much less expensive to be proactive. Caitlin, you're having a bad day. What's one phrase you tell yourself to get yourself back in the groove?
I love this question. I'm a former musical theater nerd, musical theater high school nerd. And so if you've seen the musical Sweeney Todd, there's a moment in there where they're talking about, you know, you just kind of have to appreciate the process and not just the outcome, because it's really about kind of being in the moment. And there's a line that says, now goes quickly, see now it's past. Say that to myself. Now goes quickly, see now it's past.
I love that. And I'm not even going to ask you to sing it. I'll just say that that's a great phrase. Holly, what do you tell yourself to get yourself back in the groove?
So it was just this weekend, I realized I thought I had like this sage advice from my parents that told me like, and I tell myself this all the time, and I've been doing this ever since college, like no one said it would be easy. And I really thought it was my parents. And then I heard Sheryl Crow yesterday. I'm like, oh, that was from Sheryl Crow. From my college years, it wasn't my parents at all. It was the song. And so then I realized like that my whole professional life, I've been telling myself that no one said it would be easy. It doesn't mean it can't be done. So anyway, it wasn't some wisdom of my parents. It was Sheryl Crow.
Oh my gosh, I love this. And I do love Sheryl Crow. So great to have a quote from her. Starting with Holly this time, you're having a crazy day. Maybe it's that same day that isn't easy and you don't have time for lunch. What is your go-to snack?
All right. So I can't say I have favorites, but today has been a crazy day. And my go-to is a hard-boiled egg and a cup of green tea. And that's what I had as my snack today.
Oh my word. It's like Zen and lean at the same time. Yes. Caitlin, you get the last word. What is your go-to snack?
She's so healthy. That's why she's the food person, right? Like this is why she's running the food program. She's so healthy. Because I was going to say a York peppermint patty. That's mine.
Oh my God.
I mean, have to be real. We all eat sweets, right? Like today, I said today. I didn't say like every day. I said today. Right.
I am crunchy peanut butter and apples. It is on this note that we end. I want to thank Holly Freishtat, who is the Senior Director of Feeding Change at the Milken Institute, and Caitlin MacLean, who's fitting us in right before she runs to the airport. She's the Senior Director of Innovative Finance at the Milken Institute. You have the website right at the bottom of your screen, everybody, milkeninstitute.org. Of course, you can find Holly and Caitlin on LinkedIn. You can find me as well. So if you have any further questions or you've got data you'd like to share or you'd like to know about investing in food systems information, be you a government official, a philanthropic person, or an asset manager on Wall Street, any of us can help you, and we would all love to do that. I hope you both will come back. Maybe we'll do this live from COP29. Who knows? Thank you, everybody, for your time today. And all of you listening on LinkedIn, YouTube, and Twitter, thank you so much. I will be back with you in about 2 weeks. Remember to subscribe and share, everybody. Over and out. Bye, all.
Thanks, everyone.
Boom, internet. That's why I'm Chief Technology Officer.
But all you did was plug it in. You didn't do anything.
Neither did you.
Exactly.
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 Exactly.